Hi everyone, welcome to another video from Creativo Solutions. This is actually the start of the podcast series and you're going to hear live content recorded from live classes. I hope this content will help you learn something that will add value to your lives. Consider subscribing and visiting the website for more content and resources to help you. I hope you enjoy the audio from these live classes and I hope they help you.
To tell them about accounting, how would you describe it? What would you say? What would your answer be?
I would say, just to quickly answer, I would say that accounting is like the literature on learning how the finances of an institution work, or how to handle finances.
Anything else? Think about what is its purpose. So what does the accountant actually do for the company?
The accountant handles the company's financial state, and then
and what does that involve? So you're describing their function, but what do they actually do as part of that? Okay, so, and by handling the finances, what does that involve? Are they going to be generating information?
Yeah.
Yes, they will. And that's the key, actually. So when we're talking about financial management, when looking at accounting, accounting is just the record keeping for companies. And record keeping is key because it creates or provides financial information for someone to use to make decisions. So you mentioned you're busy working for an ad agency.
Yeah.
Does the ad agency require documentation or reports on the performance of the company? Do they need records and reports on how the company is performing?
Yeah.
Why do they need that?
So they could determine their stability. How well are they sustaining in terms of the financial year?
Okay, good. So you could look at something like financial position. You could look at something like financial performance.
Yeah.
Those are two very different things to measure in the actual company. So companies will either be in a good or bad position. A company will either be performing well or not performing well, depending on their situation, okay, and what the scenario could be. So depending on the market, so you guys have covered economics as a separate subject, you know that markets go through booms and recessions. Okay, so things are going well, everyone's doing well. When things don't do so well, then companies are struggling. Okay, they're correct. They're under strain. It's difficult for them to operate. So when looking at financial position, we're focusing on the assets and the liabilities. When looking at the performance, I'm focusing on the income and the expenses. And those are 4 of the 6 accounting elements that you would have covered in the previous module. So when looking at financial position and performance, that's just 2 different areas of the business. We still need to consider the owner's equity. And the owner's equity is looking at what does the owner actually have in terms of net worth or value in the company. And that's calculated using the capital and the drawings. And they'll obviously be entitled to the profit or what's left over in that particular business. So when dealing with accounting, we're looking at record keeping, we're looking at providing information, and we're also looking at a language for communication or communicating financial information. And it doesn't matter what industry you're in. Just to use your example, in the ad agency, you're still going to be talking about assets and liabilities. They might be a little bit different to the assets and liabilities of let's say, of a college. Okay, their assets and liabilities will be a bit different to the assets and liabilities of an ad agency. Or a hospital would have different assets and liabilities, okay, compared to the ad agency. Right, so even a film studio, if you're creating film and television, TV series that's going to be sold on a network, you're also going to have different assets and slightly different liabilities. But it doesn't matter what kind of business you're going to be running, all those businesses will have different assets and different liabilities. So the language that we're using is constant, it's uniform, it's across the board. And that's why when looking at financial management, it's quite a practical subject because it doesn't matter what industry you're in, all industries have certain transactions that need to be recorded, and all types of businesses in different industries need to manage money and resources that they have. So would you describe your ad agency as being a very big or very small ad agency? Where would you put it in terms of size?
No, they're very small.
Small.
Yeah.
So if they're a small ad agency, would you agree that the resources are more limited than, let's say, a larger company? Okay, so when it comes to budgeting, are we going to be more careful with the budget to try and make sure that it's as accurate as possible and to stick to it as possible, stick to it as much as possible?
Yeah.
Definitely. So when looking at accounting, it's just about financial information. You're presenting it. So you guys have covered the basics. That was first year. You guys now know what VAT is. You know how to calculate and work out what VAT is. You know input VAT, you know output VAT. Okay, you know the different types of VAT. You guys also know how to manage inventory. That's something that we're going to be buying and selling. You guys know how to do reconciliations. So looking at debtors and creditors. Maybe doing a recon for those. Or we could be looking at a bank recon. That was Financial Management 1, where we looked at basics, things that are applied in all areas of finance. It was very focused on accounting because it's looking at the information that you're going to be using in order to make a decision. How did things change in Financial Management 2? Well, it moved away from accounting and it focused more on decision making. Remember we said accounting is just record keeping to create information so someone can make a decision. So we need accounting to have good financial management. We can't have the one without the other because accounting is the way we talk about the transactions. So we talk about bank going up or down, if I'm going to be buying or selling using cash. We talk about assets going up or down depending if I'm buying more assets or if I'm selling them. So when focusing on financial management, we need to remember that decision making is always the focus, and in order to make decisions, you have to have a broader view of what's happening in the market to make a better decision. You didn't cover too much of that in the previous module because it was still focused mainly on interpreting information, so understanding what the information is saying, and also looking at other things like budgeting. So now we know that a budget is important to predict or to forecast what we think is going to happen in the future. So you'll have a budget for your expenses. You'll have a budget or a target for your sales or your income. And hopefully as an organization, you're going to be meeting those budgets in terms of keeping those expenses in line with what you expected, so controlling that so we don't overspend, or focusing on the sales team to drive sales so they hit their targets so we get the desired income. Because the business can't survive without income. Yeah. So there's two areas in the business that we need to always consider. If I'm dealing with profit, you know from previous studies that profit is income minus expenses, exactly. if I'm looking at income and expenses, income is a benefit to the business. Expenses, something that takes away from the business. Outflow of benefit. The only way a business can generate more profit and ultimately increase value for the company is by maximizing the income or minimizing the expenses. And in order to generate income, companies need assets. And most companies aren't going to be able to buy those assets cash. A lot of the companies are going to have to take out loans in order to purchase those assets. And if that's the case, you're going to have to consider the financing. Are we going to be using debt or are we going to be using equity, depending on what the scenario is? So owner's equity we know involves capital and drawings, but we can also write an equation for owner's equity as assets minus liabilities. O equals A minus L. That's something that we've looked at before that describes owner's equity when focusing on the company's assets, comparing that to the company's liabilities. So if I'm focusing now on the decision making more so than anything else, when looking at Financial Management 3, you'll see this is the most important level in terms of your studies because you're focusing on all aspects of financial management. And this was covered throughout your 4 years now, well, 3 years, you're in the 4th year of your studies, and we're now going to be applying what we've learnt more than any of the other modules. So in FinMan 1 and FinMan 2, you were always looking at either preparing an answer in terms of accounting, okay, so record keeping, calculating ratios, drawing up a budget, those kinds of tasks, because that's the practical aspect of financial management where you need to know how to budget because you're going to be making decisions based on the budgets. Here, we need to evaluate, explain, interpret, and calculate different measures of risk and return because decisions are going to weigh on what's the benefit versus what's the risk. There's always a relationship between risk and reward, and that's one of your separate chapters, which is covered a bit later on. For now, they're just introducing this topic here because they're describing the final module that you're busy doing, which is looking at your skills that you've acquired, the knowledge that you have, to explain, assess, and evaluate different types of policies. It could be pricing or other. It could be even like a marketing campaign. If you want to launch a marketing campaign, how are you going to structure it in order to get the most benefits for the cost that you're incurring? That's something to consider. So you're going to be demonstrating your ability to evaluate performance. We're going to be looking at the different problems that can arise. You're also going to have to look at recommendations. We're going to be looking at different sources of finance. So now we know businesses require finance to operate. Now, where do we get that finance from? How do we raise the capital? There isn't one form of loan. There's many forms of loans. You get different types of loans or liabilities. And we're going to look at that later on. We're also looking at assessing and applying different techniques for the management of current assets and current liabilities because that's what the company is going to require to work or to operate on a day-to-day basis. So working capital is something that we'll look at. We'll also look at different challenges, different strategies, different aspects of managerial function as the function for a global entity. There's a lot that we'll look at in terms of background information that's required in order to make a decision. That's the key. The key is always getting to a decision. What are we going to do? Why are we going to do it? And before we can justify the yes, we're going to do that project, or the no, we're not going to do that project, we need to understand the market, okay, in a broader context.
And that's a short snippet from the live classes. Thank you for listening. Please consider subscribe to the channel and post any comments or questions you have below, and we'll keep making more to help you.